right. Good day and welcome to yet another training video. In our previous section, we established a concept which is tagged market structure. We're looking at market structure. And we know that there are three basic market structures in the financial market. About the trending market, we have the ranging market, and lastly we have the choppy. Right, so the basic market structure we have in the financial market. Within the course of our training, we have succeeded in treating trending market. So I believe by now you already have a basic knowledge of what a trending market is, how to trade a trending market, how to a market that is trending. We also introduce the basic withdrawal trend lines, draw your support and resistance on a trending market. Those were the basic things we have been able to establish on the beginner section, right? So on today's section, we're going to move forward to the next concept. We're going to move forward to the next concept, which you have pending, which is called the markets, the ranging market. Right. Let's treat the ranging market today. We've done the needful on the trending market. Is important to the trending market. The trending market is not something you have not been able to notice. So just put on your on whatever you're using to jot your notes. Ranging markets. Now, the ranging markets are pretty straightforward, right? Remember when we talked about when we're discussing on the section of trending markets has a pattern, all right, an upward pattern. Trending markets either up or what, or down, right? So for a trending market, we know that it is either going up or it is what, coming down. So in a situation we have market patterns in this form, we know that this market is going up and is making a higher highs, higher lows, higher highs, higher lows. So we know that it is an uptrend. Very easy to identify. In another market condition, we have situation like this in the financial market, making a lower low, lower high, lower low, lower high, a lower low, lower high. We know that this is what, a downtrend market. So basic and so straightforward. All right, but in a ranging market, the market makes more of a horizontal move. All right, that is, it doesn't continue upward, neither does it continue downward. Something like this. It hits here. We have something like this kind of market in a ranging market. All right, so it just goes up and down. Okay, it maintains a particular space. All right, I want you to take note of everything. So in a ranging market, we have financial markets making an up and down movement. It just goes up within a range or within a space. All right. They are often called sideways markets. This kind of markets are often called sideways markets. The reason is because their neutral nature makes them what appear to draft to the right horizontally. Now, this is what we mean. Price making up up and down is a sideways market. When the market makes a series of higher highs and higher lows, we can say that that is what a trendy market. Of course, when we have a market pattern or a market condition making what a higher highs, higher lows, higher highs, higher lows, higher highs. But in this particular market condition, there is nothing consistently taking the market upward in a pattern of higher highs, highs, higher lows, lows. Market does not make such patterns or such movements. Rather, the market makes an up, down, sideways movement. But when it stops making these consecutive peaks, we say that the market is ranging. A ranging market moves in a horizontal form, like I drew already, where buyers and sellers just keep what? Knocking price back and forth between support and resistance, right? So buyers buy, price goes up, sellers sell, price comes down, buyers buy. That is just what happens on a ranging market, all right? So on my display, we have a typical ranging market. Price making what? An upward movement and a downward movement. The difference between trending markets and ranging markets is that trending markets tend to move by forming patterns of higher highs and higher lows in the case of an uptrend. Take note of this. And higher lows and lower lows in the case of a downtrend. Remember that the only difference between a ranging market and a trending market is for a trending market, the price makes a series of what? Higher highs, higher lows, higher highs, higher lows for the case of an uptrend. And for a downtrend, price makes a series of lower lows, lower highs, lower lows, lower highs for the case of a downtrend. But a ranging markets tend to move horizontally between key support and resistance levels. So you tend to get to know that this price makes a series of what? Of movements targeting each word, each key support and resistance levels, and within a horizontal should I direction, right? That is what that's the big difference between a ranging market and a trending market. Price tend to make what? A horizontal movement between key support levels and resistance. Okay, so have something like this. Price comes here, it sells, comes down, it buys, comes down, it sells. All right, these are what ranging market are. You understand your understanding of you better use the right price action strategies. Right? I want you to understand the point I'm trying to make. Being able to identify each market condition, each market setup, to help you know what you are up to in the financial market. All right. So moving forward, trading ranging markets is completely different from trading trending markets, because when the market is ranging, it creates equilibrium. All right. It creates equilibrium between buyers. That is, buyers are equal to sellers. So it just a very basic explanation. So sellers are equal to buyers, and there's no one in control of the trend. Sellers are selling while buyers are buying. The best buying and selling opportunities occur at key support and resistance level. Remember, for a trading market, we pointed that price, you must trade along trend. So if we're having an uptrend, if we're having a market condition making a higher highs and higher lows, higher highs and higher lows, higher highs and higher lows formations, you should know that you are only going to buy at the pullback or retracement level. That is, you're only going to buy at the retracement level right at this point. You're only going to buy at the retracement level right at this point. You're only going to buy at the retracement level right at this point. So you are only looking for a buy for an uptrend. While in a case where price is making a lower low, lower high, lower lows, lower highs, lower lows, and lower highs, you obviously know that you are what? Only going to sell at what? At the pullback or retracement level, at the low, at the high rather, with the surety that price is going to drop. You buy, you sell at the highs, at the highs. So for a case of a downtrend, you are only looking for what? For a sell. Why in the case of an uptrend, you're only looking for a buy opportunity. But in the case of a ranging market, you are only looking to buy when price is near support and sell when price is at resistance. So you buy low and sell high. You buy low and sell high. There are three ways to trade a ranging market. But we're not going to go into details for now, because what we want to get here is the skill to look at your chart and decide whether the market is trending or ranging. So the major thing we are interested in doing is make sure you develop a high familiarity with the chart to know when price is trending, when it's ranging, and when there's a choppy market condition. So, well, as we proceed and get more deeper and deeper, we would, of course, learn more about how to trade a ranging and other market condition. If you can't differentiate between a ranging market and a trending market, you will not know how to use this price action tools. So it's very important that you understand a ranging and a trending market. All right. The first way to trade ranging market is by waiting for price to approach what? Resistance, so you can sell. All right. So when price approaches resistance level, what you do, you quickly and confidently sell, of course, having other confirmations on your side or in your favor. Then you buy at what? Key support levels. All right. So you can see this does near support, and there is a dodgy confirmation that this price is going to reverse. So with some of the technical confirmations, right, you can get in on that trade. Similar thing happened here. It was low. Similar thing happened here. All right. All right. So you have some basic confirmation to telling you that, hey, price is dropping or selling. So here, you buy low, and there is a buy. So we have a buy area for you. So you know that when price, for a ranging market, when price drops to a support level, you confidently buy. All right. When price goes up to its resistance level, you confidently what? Sell. Right. So the second way of trading ranging market is by waiting for the breakout from either the support level or the resistance. The best way to also now we have done the first way to trading a ranging market. We talked about the first, which is buying low and selling high. So you buy at key support levels and you sell at key resistance levels. That's one way to trade in a ranging market. The another best way or another good way to trading a ranging market is what? Is waiting for what? For breakout. All right? You want to wait for breakout. When the market is ranging, no one knows what is going to happen. We don't know who is going to be in control of the market. This is why you have to pay attention to the boundaries. But when one of the players decides to take control of the market, we will see a breakout of support or resistance. Now, remember that I mentioned that in a ranging market, no one is in control. Buyers and sellers are equal, right? There's an equilibrium in the market condition at that phase or at that moment. So buyers are pulling price up, sellers are pulling price down. But then, of course, you know that in a ranging market, since both buyers and sellers are equal, no one knows, not just you alone, no one knows who is going to overshadow who the next. All right. That's why you have to always be on the alert. All right. So the breakout means that the ranging market or the ranging period is over and the beginning of a new trend will take place. All right. So you have this on my display, we had a ranging market from all of this angle, price ranging, hit support, drops, hit resistance, I beg your pardon, drops, hit support, goes up, hit resistance, and all of those. And there was a breakout along the zone. You see that breakout? As you can see on this display. So the best way to enter is after the breakout. After you've seen a breakout, is another important or another good way to enter. It is important to remember that range boundaries are often overshot, giving the illusion a breakout is occurring. Right? This can be very deceptive and it does trap a lot of traders who position into the breakout. All right, so the next, we've mentioned the first way you can trade a ranging market, which is waiting for price to come down to either a key support level or a key resistance level, right? We mentioned that. So we also stated that there are other ways to trading a ranging market, which is waiting for what? Waiting for price to break out of the range, right? So when price breaks out of a range, there is a good area to trading a market. The third way is when the third way to trade a ranging market is to wait for a pull back after the breakout of a support or resistance. Remember when we were talking about or establishing a basic knowledge of support and resistance, we mentioned that the previous support can become the next resistance, while the next resistance can become or could become the next support. So in a case of a ranging market and price makes or is making hitting the highs and the lows and the highs and the lows and officially or finally breaks out of that zone, for in the case of this display on my screen, most times or always all of the times, there will always be pullbacks. And be rest assured that the pullbacks is going to rest on the resistance level that served as a resistance previously, right? It's going to rest there and it will automatically become a support. So when a breakout happens, you wait for what? A pullback. You wait for a pullback. This is what we mean by waiting for pullback. You see that breakout, a ranging market, all of those, all the way here, ranged, and then there was a breakout around this area, and then price pulled back. So in that pullback, you find a good entry, right? At the pullback, you find a good entry, right? So at the pullback, you find a good entry. Now, we've mentioned 3 ways to trading a ranging market. 1, you buy at key support level or key resistance level. All right. So for key resistance level, you sell. At key support zones, you buy. Or you wait for a breakout and then a pullback, then you can continue riding the new established trend. After the breakout, the market comes back to retest the resistance level, like I mentioned before. The pullback is your second chance to join the buyers if you miss the breakout. Okay, so if you miss the breakout, you do not just enter the markets. All right, you wait for what? You wait for a pullback. The pullback is what gives you a reliable entry point or entry zones. What you have to remember is that a ranging market moves horizontally between the support and resistance as we have previously established. These are key levels that you have to focus on. The breakout of the support or the resistance level indicates that the ranging period is over, right? Remember that all of these are phases in the financial market. They are not permanent. They are only going to last for a while. They're temporary. So you're not going to get in the market and feel like I'm going to trade a ranging market all through my section, right? If you meet a ranging market, you might not, it might stay there or it might break away before your trading session is over, right? So ranging markets are not permanent. Neither are trending markets permanent, all right? No market condition is permanent, all right? So if we have a ranging market, of course, bear in mind that there is also going to get to a phase where price will break out of the zone. So the breakouts and pullbacks are what gives you a good entry point to join either the buyers or sellers, that confirming those who are in control. When you are trading a ranging market, always make sure that the market is worth trading. If you feel like you can't identify the boundaries, support and resistance, this is a clear indication of a choppy market. Now, when we talk about choppy market, you understand the difference between a choppy market and a ranging market or consolidating market, right? So, okay, when we get there, we'll talk about the choppy market, but let's keep our focus strictly on the ranging market. In Forex, choppy markets are those which have no clear directions, right? In a choppy market, you do not have any clear direction. Price is just making a candle high and a candle low, right? Something like this could serve as a choppy market here, just here alone, just here alone, just around this zone, okay? So you see that there's no clear direction, just making up, down, up, down, up, down, per candle, all right? So there is no clear direction for a choppy market, okay? So you have to know what you are watching. You have to know that you're watching a choppy market, right? Let me display a choppy market. All right, so look at this. This is a choppy market. Any market condition that makes a close, tight candle movement up and down does not have a clear direction and is a choppy market. This type of market can make you feel very emotional because this kind of market lacks momentum, lacks movement, and are very slow and they lack direction. And you find a lot of noise in this kind of market condition. All right. So you would even doubt if your strategies, all right, if they're still working or not. The best way to determine if a market is choppy is just by what? Zooming out on the 1 hour time frame, all right, and looking at that, zooming out from the 5 minutes time frame or 15 minutes time frame to the 1 hour time frame, depending on the kind of trader you're becoming. Remember, what we're doing here is the most advanced system of trading forex, that's high frequency forex HFX. So we trade in minutes, all right. So you're sure of making a huge ends meet or income within minutes or within an hour. The best way to determine if a market is choppy is just by zooming out. After some training, screen time, and experience, you will easily be able to identify if a market is ranging or is choppy. All right. So that is all we got for this, or that is on the market structure. I will always refer you back. I will always refer you back to what? To the chart. Look at all of these market conditions. Look at them. They are always there on your chart. They are always there. We'll have them. We will have them always. For example, we have here as a there are two basic. Here we'll have a ranging market. Price come up, went up, came down. But then at this particular area alone, we had a choppy market. All right. Here we had a choppy market. So you should always go back on your chart. Here we have an uptrend. Okay. So always go back on your chart. Look at all of these market levels, market conditions. Here we have a choppy market. All right. A choppy market is no area for you. You do not want to trade a choppy market. You don't want a market condition that will make you feel emotional or make you doubt your abilities. Here we have also a choppy market. All right. You see that we had a choppy market also around this area, and price was giving us a choppy structure. And we mentioned that price, or in a choppy market, price don't have a clear direction. Here we have an uptrend. That is, I'm picking this area alone. This area alone, we had an uptrend, obvious uptrend. You should know that, you should see that, and you should know how to confirm that as well. So that is that on today's section, right? So you should also identify how to know the different market structure. It will aid you. It will aid you. Imagine what happened all the way here. The market, there was a choppy market all the way from all of this end. You see that? A choppy market all the way. Okay. Market does not have a clear direction. All right. So learning how to master and identify, here we have a clear downtrend. You don't need a seer to tell you how to identify all of this. I believe we've passed this phase and we've done justice to market structure. In our next section, we would introduce a different concept. All right. Till then, do enjoy the rest of your day. Bye for now.